Hi everyone, welcome to yet again another exhilarating, exciting and insightful episode of Podcast and Trade with Leila Tati. As always, I've got nice surprises for you, but today I'm not alone. I'm with one of former financial services professionals who has experience in banking and insurance, where he held senior positions in account management and risk management. After being let go from the industry, he took a leap of faith and invested all his savings in the now booming cannabis space. As a reborn Christian, he is a firm believer that God really does work in mysterious ways, which is where this unexpected career pivot happened that landed him in the trading space. Over the past couple of years, he has explored different trading styles from scalping and ICT concepts to OCT and supply and demand before committing to volume-led methodology. Interesting, right? So, this gentleman we are talking about, he has continued after discovering Anna Cowling's work on the volume price analysis and the broader quantum view of how the market moves. He has discovered his own strategy in building how the reading of the market goes about where volume is concerned and the intent of the market. As of today, he is exclusively trading prop firms and has won multiple prop firm challenges from funding ticks and FTMO. Ladies and gentlemen, as this guest continues to develop his final edge of what matters the most, psychology, let us all gladly and warmly welcome him to our channel, Podcast and Trade with Leila Tati, to tell us a bit more about himself. And that is none other than Tyrone Rees. Welcome to the show, good sir.
Yeah, thank you for having me on, and thank you to the guests that are watching.
Thank you for coming. So we've already had a bit of a lot about your bio, which is very interesting. Probably for someone out there who's looking to go into the prop firm path in terms of trading, how would you advise them to win these challenges? Because I hear a lot of people saying this is difficult to win, this is a difficult challenge to do. What is your advice on how they can work around it?
Okay, so let me first off and just say that it's a bit of a swear word in the industry now, funding ticks. They've just gone under. I was lucky enough to pull a couple of payouts out of them, but they are no longer around with us, but FTMO certainly, yeah. I think getting involved in the prop firm space is, number one, you've got to have an edge. Okay, so, you've got to have an edge down pat, something that's back-tested, something that's journaled, and something that you have confidence in. Going the prop firm route is certainly the more difficult and challenging way to get into the trading space, but I also think it offers much more upside, lower capital barriers to entry, that sort of stuff. But yeah, so start off with getting your edge. Make sure you got your edge, and that's down pat. Then find a reputable prop firm. There are so many fly-by-nights. There are so many scammers. There's some great websites that you can have a look at. There's Prop Firm Match. It's really, really good. Lean on things like Trustpilot. Follow the accounts on Twitter or X, whatever it's called now. Join the Discord servers of the various prop firms. So let's say, FTMO or the Fivers or funding ticks as they were, or funding pips as they in the CFD space. They've got Discord servers that you can join, whether, that it's free. Get in there and message some of the guys on the server and say, hi, I'm, Joe Soap from South Africa. Just want to know how's XYZ with their payouts. I receive that on a daily basis. So make use of it. So I'll say, these guys were a bit terrible, these guys were decent, so on and so forth. But do your research. Don't get sucked into the big sale scams. There are Black Friday specials on some of the guys. Yes, take advantage of that. But make sure that you're paying an amount that seems reasonable. If you're getting access to $100,000 and you're paying $20, it's almost too good. It's almost too good to be true. In fact, it's probably not true. So do your research. If you're going to buy a challenge, save up, stick to the trusted guys. You stick to your FTMOs if you want to be in the CFD space. I suppose that's something else we can chat about later, whether you want to do CFD trading or futures trading. I'm slowly making the transition to futures. With my strategy, it definitely works better, and I just like the structure of futures better. But there are prop firms in the CFD space, and there are in the futures, but there's some limitations with futures. But rather save that extra month. It'll be worth in the long run, because the last thing you want to do is get involved with a shady prop firm that has got a poor track record, that overpromises and underdelivers. And it's not so much the money that you lose, because the money in the grand scheme is really insignificant. If you're paying, say, $100, it's a lot of money, but if you're getting access to, a $10,000 or a $20,000 account, $100 is not much, in this, given that trillions move every day on the market. But it's the time that you waste. So the last thing you want to do is go through all the effort of passing a challenge, which could take a month, 2 months, could take a day, but it could take up to 2 months. And then after that, you do all the work to get a payout, only for it to be denied for a nonsense reason. It's time wasted, but it also takes a big psychological toll on you. It's really, really tough. So save up, use sites like PropFirm Match to see how the various guys are rated and what their payout history is, and who's being held to account. There's also various accounts on X that analyze each new prop firm and each existing prop firm, and they give out, I think, one of the names of one of the good guys is Prop Squad News, I think it is. But I can also just drop those to you if someone wants to find out the X accounts to follow. And they really good with being up to date on, this was a denied payout, why was it denied, what's the reason. And they also sometimes, which is great, they pick up the fight on behalf of some traders. Like I've actually seen a couple of big boys backtrack on a denied payout because the community got involved behind a certain trader, which was great. We got to stick together in a big way. The prop firms it's an amazing opportunity to grow your own personal funds and get access to the markets. But at the beginning, make no mistake, it's you versus them. It certainly is. Later, if you prove yourself and you move to actual live trading with its actual prop firm funds, that's a different story. But at the beginning, until you've got 10 payouts, it's strictly a you versus them thing. So we've got to stick together as a community. We've got to be vocal about the prop firms that that don't play fair, and you've got to hold them to account. And luckily, that is available on various platforms.
Oh, great. Awesome. Thank you so much for sharing that insight with us. You seem to know a lot about prop firms, meaning that the past couple of years you've been doing the work. But if I may ask, I hope I'm not intruding or imposing in your private matters, but can you please tell us and the viewers at home, how much is the biggest prop firm account you've won?
That is a little bit of a loaded question. The largest prop firm challenge that I've won is a $200,000 account. I then duly lost that quite quickly. And that's how it goes. And to be frank, I think that was it was a beginner's luck. I can remember the trade to this day. I picked the top on the US 30. I think I had 2 1-2-5s, and it was just done. I thought I was in the top of the world. So then I passed that, and then I think I passed the next phase, phase 2 with FTMO also. It was also, I think, like 1.5 trades, almost closed it halfway through, and I thought, man, I can't be touched. This is the easiest.
Once you get overconfident in the markets, that happens.
Yeah, exactly. And then the Shampoo came out. So it's with, it's actually with, I can smile about it now because it was very important for my journey.
True.
And once I got to the live funded, I did not win a single trade. And I scaled down. Eventually, I was scaling down to 0.1 risk. I was absolutely wasting everyone's time. And then I lost that. So then I lost that account. And that was a massive wake-up call for me. That was a huge wake-up call. And it showed me two things. The first thing that it showed me was, well, three things. I think the first thing is you ain't that hot.
Yeah.
However good, you ain't. You ain't that, okay? But it can be done.
Yeah.
It can be done.
Definitely.
But it's going to require some luck, but there's a lot more work, and the work's not in the charts. It's in my head.
Okay, great.
Yeah, it's in my head.
I like that.
So after that, I only trade maximum of $50,000 accounts now. So yeah, I've got $50,000. So so the largest is 200. Never done that. Largest payout is 2,800 or 80% of that. But monthly, that ranges. It honestly ranges from about $600 to about $1,200. Sometimes it's zero. Like in February, in January now, I've only taken 2 trades. I took one 9.5 R and I've lost a 1.25 R. I'm currently in one now, a JPY bar. I post everything on Twitter. Beforehand. That was part of my psychology. Told myself accountable. So this is a lean month speaking, but the markets have been terrible. But I'm very proud of having the discipline not to trade. I mean, I think we spoke offline about, ooh, I'm a bit worried because it's not looking great at the moment, but that's how it is. And I think that you got to take that. You got to have that mental fortitude to be able to go to look at the charts, say, I don't feel it. So walk away.
Great. Exactly what I always say, guys, on my website, lelatatientity.com, where I teach people how to trade. It is not every day that you have to trade, because part of risk management involves staying away from the charts. Don't forget to like, subscribe, and comment down below. So before we move on, I've had so much from the gentlemen. Thank you so much for sharing with us. But for me now and the people at home to better understand what we have been talking about, we like practicals. So what I have here is an iPad that's already on a chart, right? So on this iPad, I'd like you to just show people at home a little bit of what you do when you get to your charts. This part or the segment of the podcast is called How Well Do You Know the Charts? All right. There's a lot of fly-by-nights. You said that, right?
Yes.
So let's get down to legitimacy and the genuinity of what you do. You could help someone out there. Out of 100 people, 1 person is enough to get assistance.
Sure.
So let's take it away.
Obviously for the show, but first golden rule of chart analysis is don't do it on your cell phone.
Okay.
but we're going to do this today to work.
Okay.
All right. So I've pulled the euro British pound a chart up. I'm going to do an analysis on that. The reason why is I love the structure of the euro GBP. Market structure is really, really decent. It moves slow, but that's good as a beginner because then I got more time to think. Okay. The other reason why I like Euro GBP is the liquidity sweeps are generally a lot tighter, just owing to the nature of the pair. So it helps specifically with my strategy, mainly being looking at liquidity and then matching that with volume. Okay, so if we have a look here, we've got the daily chart. The first thing I do when I open the chart is every morning I clean my charts and I start afresh. And then I do a weekly forecast on a Sunday afternoon. So the first thing I look at is overall what can we see. So we can see that there was a massive uptrend, starting around about August on the daily, and then we've had a massive sell-off. The first thing I ask is, what does that sell-off do? The sell-off induces people to sell, okay? So then I start asking myself a couple of questions. Where has liquidity been taken? And where is liquidity resting? So as we look at this today, just bear with me. We can see over here on the daily, there are some equal highs, which in my world that I see as a drawn liquidity. So that in my mind is already saying there's a magnet somewhere there. Then I start looking at the lows and I have a look at what have we taken and what's all still resting. So if we see over here, just bear with me, there it is. This is there's a bunch of buy-side liquidity. So that is money that is essentially waiting to be taken. So now what I need to do is start framing the question, are we going to move up to the top side of liquidity, or are we going to move to the bottom side, the sort of the buy side liquidity? So the sell side liquidity or the buy side liquidity. I'll just mark this as some sell side liquidity. There's some sell side. And don't forget, we've also got all of this liquidity up here, which at some stage needs to be devoured. Okay. Right. Okay. So the first thing is we have a look here. So we've got what appears to be some sort of low. What liquidity did it take? Right. So we can see that over here it took this liquidity. So apologies. So it's taken some liquidity now, and now I start looking for market structure and volume to tell me, are we likely to approach the sell side liquidity, or do we need to, or is there still room on the buy side for it to move down before sweeping to go back up to the sell side liquidity? Okay, so let's focus first of all on the buy side liquidity that was created around August to October. We can see that over here we're building liquidity around that zone. Okay, because we've built liquidity around this zone, I'm going to say to myself, and there's some liquidity below, that's a trap. So that is a retail trap. Retail traders, that are following sort of SMC concepts and some RCT concepts, they're going to look to buy from this area. I don't want to buy when they buy. I want to buy when they stops get hit. That requires an immense amount of patience on my side, and there's days when I'll have a look at the charts and I'll see nothing, but it also results in a lot less losing trades. Okay, so the first thing I say to myself is I want to buy below this line over here. I will put an alert here. I'll put an alert on for myself, and I will just wait. I will just wait very, very patiently until it drops below that line. I've developed a little indicator for myself that analyzes statistics. I've got a stats background, so I've developed an indicator that helps me identify statistically significant changes in volume. Okay, so for example, if I put this on, you'll see it's running now, and you can see that at the moment in my area of interest, in my trap area, there's no statistically significant volume. There is a little bit to the sell side liquidity, but we're very far away from there. So once I've drawn this picture out, I know that there's a trap area. I know the area below which I want to buy from, because I am now looking for us to target the sell side liquidity. There's equal highs at the top there. I will wait for a sweep of that low that I've just outlined there, and then look for a structural change supported by volume to help me with an entry. So if we had to just move here, for example, to the 4-hour time frame, you can see that we've already started increasing volume. I love seeing this, because before we start moving to the top, which would be a massive move, that's a massive swing move, we need to take as much liquidity out of the market as possible, and that's the consolidation phase. I'm sure you've mentioned that a lot. The consolidation, the main purpose of that consolidation phase is to suck as many suckers in. Okay, this is what it is. To suck as many suckers in to get the fuel. Think of liquidity as the fuel, the rocket to get to where it needs to be, or to drop the bucket where it needs to go. So I like seeing this. I'm very, very happy with this liquidity over here, this buy side liquidity. If I can, I'll just label this, sorry for you there. I'm very, very happy with that. I'm very, very happy that we are building below this here, this inducement. So in the end, my strategy would be this. I would wait for all of this to get taken. Let's just do this. Now I know I'm waiting for something like this to happen. That is what that's what I'm hoping to see. And if you, just like you see these little volume blocks, that just tells me which candle had statistically significant more volume than the other candles around it. I would ideally want, for example, I call it a volume block, to print over there. Let me just make it a different color. Just do that that's suppose a bit confusing. Let's make it purple, okay? Once this volume block prints after a big liquidity sweep, I will then set a limit. I will set a limit. The stop would go right under the low, and I will hold. And I could hold this days.
Oh, wow.
Yeah. This could go, yeah. Especially if you're going to, so this is the analysis from the daily and the 4 hour. I wouldn't need to go lower than this necessarily.
Of course,
I would leave it here. I would leave it at this. Again, that requires an immense amount of patience. And I found the best way not to bugger a trader is to just not look at it. So
awesome.
Set it and walk away. So that's very, very quick. So if I've committed too much margin to these trades, I won't trade. I'll see my kids, I'll go play with my dog, I'll run my business, I'll do other things. If something like this presents. If there's nothing happening, then what I would do is do a very similar analysis, but start going down and looking for some entries and take some intraday stuff. Depends how much margin I've committed to the trades that are currently running. Or if I feel that a setup is like really there, then if the setup's really there, I will close a previous limit that I've set and run with that intraday.
Oh, great. Thank you so much, Mr. Tai, because that just certified you as a trader. I appreciate you sharing your knowledge with our people as well as with me, because I'm also learning something.
Sure.
I've been saying some of the things you are saying to my audience, and I hope now they also get a clear understanding coming from somebody else. Guys, as you just learned right now what you can do on the charts, and you also got to understand them better, I would say do not waste any more time. We have this broker called xCHIEF. They are giving away $100 no deposit bonus. All you have to do is to sign up an account with the link down in my description, and you will get your $100 no deposit bonus. There's many other bonuses, including $500 welcome bonus, whereby when you deposit, you get 100% of your equity added, so that you are able to trade in larger markets with big people like Mr. Tai himself, so that you could make money. So don't delay, don't waste time. Continue to watch out for many opportunities like these that I present to you. And remember, your next trade is on us. Mr. Tai, on our introduction about you, when we're introducing you, you mentioned one last important factor that I do appreciate as well. I normally talk about it a lot. I call it emotional intelligence. People call it psychology. Other people call it emotional intelligence too. But just to close off the show, I'd like to hear from you. Where are you now in terms of your important edge? You call it the final edge. Where are you now with your psychology in this space, especially having won $200,000 and lost it immediately? And you mentioned that it really messed you up mentally, psychologically. And how then now are you managing such losses or such issues and things that you face on the charts?
That's a really good question. You know, one of the things I also did with AI was I fed it my strategy, and I asked it to give me a brutal assessment of it. And if you ask ChatGPT to be brutal, it's almost rude. Okay,
yes.
But overall, the strategy is good. There's no reason why, I shouldn't be books written about me, But the reason why there isn't books written about me is because of my mind. I think a strategy is actually quite easy to come by. You could watch YouTube, you can watch Instagram. Strategies will present itself. I mean, you can buy some strategies for about $20 that are not terrible. I mean, they're okay, they work. A lot of the CRT stuff, it's okay. There's something there. A lot of the what do you call it? The opening candle range stuff. It's there, but it's your mind. And I think once you've got an edge, it's 95% mental. I'm not there yet. I think I'm open and honest enough to say I'm not there yet. One thing that has certainly helped in this journey is, first of all, reading a lot of. I pivoted from spending hours of training on technical analysis and fundamental analysis. I've spent comfortably triple the amount on psychological books and reading them over and over and over again. And I feel I've got much more value out of the psychological books. Your books like Your Best Loser Wins, Trading in the Zone, really, really good stuff. I think it's what we call trader psychology. There's so many good books, and that's all audio books as well, which is awesome. You just walk in the dog and you put in. So where am I? Nowhere where I want to be. I'm glad that I realize now how important it is. I realize now how important journaling is. If you're not journaling, if you're not meditating in the morning, if you don't have a strict routine, if you don't do your Sunday prep, you're not a trader. So I'm going to call you're not. And you might have short-term wins, but you're going to get eaten in the long run. You're going to lose everything. So, a lot of the trading guys, they said one of the worst things that ever happened to them was actually winning up front. And it's that short-term success, which is a dopamine hit to the brain. You get lulled into this false sense of security. I was lucky that I lost it quick, that I got it, but I lost it quickly. So where am I? I think I'm very happy with my progress. I'm really happy with the process that I have. Waking up at 4:30, doing meditation, then doing an exercise, then doing a cold shower, then doing the vitamins, then do the kids to school, then do a journaling. Personal journaling is as important, if not more important, than trading journaling. Getting your own thoughts, because it's trading is it's really in your head. So it's important that your head is right. That just like you go and train your biceps, if you're not journaling and meditating and doing and training your brain, you got no chance. This is you're selling your brain power. So why wouldn't you? If you train your biceps to look good on the beach, how do you think you're going to look good on the charts if you're not exercising your brain? So I'm very proud of my consistency in that. I've seen an immense amount of improvement in my trades, in my patience. I had huge FOMO. FOMO was my biggest problem. And my ability to just walk away. I'm able to just realize you're not thinking right. You're not right. I get a little thing in you, and I'm happy I can just walk away. So it's been a lean January, but in reflection, if I had a look at those trades, if I had actually placed them, I probably would have blown the account. The counts. I would have, without a doubt, I would have blown it. So yes, it's lean, but I'm still fighting. February's here. February's coming. It's here.
Yes.
So work to do, but happy with the progress.
Oh, thank you so much for that. As well as everything that's happening in the world, the markets are not having it easy either. That's it, guys, from us. Thank you so much for coming through to the show. We have so much little time, and I would have loved for this conversation to continue, for people to also hear some of the insights that we also get to learn from us, people that are able to talk to you offline. Thank you so much for your time. I appreciate you coming here. Looking forward to following on your journey and seeing you more on Twitter, on X. Tell me, what is your handle on X for people that might want to find you?
VOB Trading.
VOB Trading, guys. You got that right. And as you heard, trading is a journey. It requires consistency. It requires perseverance. Above all, it requires you to be focused. If you are not focused, you won't be disciplined. If you are not not persevering, it means you are not psychologically in tune with what you are doing. This is it from me, guys. Don't forget to check out my website, subscribe to the channel. Until we meet again in what I'd like to say to you is another country somewhere around the world. So I'll see you in the next episode. Thank you so much for joining. Cheers.